I read the news so that you don't have to. So everyone's running away from private credit in the US right now, but in Europe, banks are quietly going all in. So either Europe knows something that Wall Street doesn't, or we're about to watch the same movie twice. In this headline, it says BNP Paribas bets European private credit boom can defy US downturn. Okay, so let me break this down for you. BNP Paribas is one of Europe's biggest banks, and they've just said that private credit in Europe is just getting started. They're planning to pull in 350 billion euros by 2030 into their asset management arm. And a big chunk of that, private credit, aka loans made outside traditional banks. So we're talking corporate lending, infrastructure products, real estate debt, and energy transition financing. Basically the stuff banks used to do, but now packaged as investments. So what's going on over the pond? Because something interesting is happening in the US. They are actually having investors pulling billions out of private credit funds. Why? Because there's concerns about risky lending, especially to tech companies, and fears that we've got a 2008 style slow leak happening. But BNP is saying, Europe, c'est différent. We are different in Europe. Why? Well, they're pointing to three main things. They're saying that there's stricter regulation here. Europe has tighter rules around mis-selling, risk exposure, and investor protection. They're saying it's a less crowded market as well. In the US, private credit is already massive, but in Europe, things are still kind of in the early innings. Also, they're saying there is huge financing demand. Basically, Europe needs money for energy independence, green transition, and tech investment. And banks, they just aren't lending enough. So private credit steps in like, yeah, cool, we'll do it, but at higher returns. Okay, this is the part that nobody seems to be saying out loud though. Private credit is basically banking without bank regulation. And we know historically, if you've read this story, this is where the problems start. It's giving shadow banking 2.0. And honey, we've seen this before. 2008 with mortgage-backed securities, and now private credit funds holding illiquid loans. The risk? Everything looked calm until investors want their money back. So the real question is Europe actually early to a massive opportunity, or baby, are they just late to the same crisis? Because here's the thing, if this goes wrong, and it very well could, it won't just hit the hedge funds, it's the pension funds, the insurers, and everyday investors. That's when it becomes systemic. I don't know what to tell you. Europe's always felt supreme, so let's see if hubris comes and bites them in the ass.